Bitcoin just closed at its highest level in 44 weeks and its highest level in 2023. And like we'll show in today's video, time is fast running out for the bearish investors across Bitcoin, cryptos, and the traditional markets, our SP 500 and the NASDAQ. That's what we're looking at in today's video. So make sure you have subscribed with that like button clicked on down below. And if you're an Aussie, there are a couple of promos going on for you guys with BitGet. Link is in the video description. Sign up using those links. You can share in one Bitcoin. And for SwiftX, your on-ramps here, they've doubled the sign-up bonuses. All right, so enough of the shills. Let's have a look at what's going on with BTC and the stock market. This is your home of macro cycle analysis. You're not going to get this anywhere else across the internet because most people are bearish right now. And I know this because I follow up on what's going on in the market sentiment very closely across Twitter and YouTube. And I hope you do the same as well. So in terms of BTC right now, we've just seen it close at its highest level in 44 weeks. Highest level in 2023. Typically, this is not what you would expect in a bear market. And I also want to show you three macro signals that we are following for the 100% confirmation that we are in a bull market. Now, we've had one of those signals crossed. We're on our way to the second one very, very soon. And then the third one is still about $14,000 away. Before we get to the signals, what's happening in the market this week is CPI. We've got CPI on Wednesday. On Thursday, we have more FOMC meeting minutes that's going on. And then also on Friday, there are a few other announcements here from the US. Now, if you are a subscriber of the channel and a subscriber for some time, you'll know that we just look at these things to identify if we're going to get some volatility in the market. What happens at these meetings doesn't necessarily push the cycle in either direction. Once the cycle is in play, that's up or down, things remain that way. And I know this is not what the majority of people believe. They really wait at the edge of their seats to see what happens at these meetings. But like we've identified many, many times before, it doesn't really matter. This is basically just a soap opera for anyone that is new to the market or even existing people who just want some sort of explanation to what's going on. As you know from technical analysis, the chart tells us what is going on in terms of the buyers and the sellers, the investors in the market. And the news can just make up any sort of narrative. People just take a narrative of what's going on so they can try to make sense of what is happening in the market. But as long as you have an idea of what is going on in the cycle and you're following the charts, you've got all the information you need. All the power is with you and not with the news items. That's what I want to give you as some sort of empowering message, because we have what we need here in the charts rather than that stuff that's going on out in the news headlines. So as we can see, the market is up, highest closes so far. But in terms of the daily, we are still in our consolidation range here. That's been going on for 24 days since the 17th of March when we had that nice pump up from 25K up to around 27,500. So we've basically been in this range since middle of March, and we're currently getting close to the middle of April. So we're in this particular range. Yes, the price can go either way, but because the market is in an uptrend, we're seeing some higher highs and higher lows. Then you have to give the bias to the bulls. This is on the short-term trading here. So the bias is towards the upside. There's always a possibility that we get some nice fake outs to the downside, then a push back into the range. Typically, that's what I would prefer to see based on what I've seen in the past over my 12 plus years of trading. If we get a breakout to the downside or a breakdown, then we can at least take out some of the stops so the market can then rally up and push a little bit harder. But we keep going up from this point and fake back into the zone. That is really quite weak for the price, depending on which chart we're on. In this case, we're on Bitcoin. So it's really weak for the market. If we push up out of the zone and then back into the zone, that is a very weak signal. So keep a lookout for that should it happen this week or next week, as we're getting towards the end of our trading ranges here. So that's the weakness and the strength that we could see in the markets. How else we could see strength if it breaks out and remains above the trading range. That's what you want to see. Break out and hold above. That's a good sign. A breakout and close back under the trading range. That's a bad sign. It's a bad sign depending on which way you are looking at the market. So it's a good thing for the bears, a bad thing for the bulls. What else we're seeing here? Well, we're seeing the total cryptocurrency market cap also breaking out. It's had its highest weekly close in the last 44 weeks as well, just like Bitcoin. So this is a pretty strong sign here for the total cryptocurrency market cap. 50% of it's made up of BTC. What the market is telling us is that the smart money is buying up here. That's the terminology in the market, dumb and smart. If you don't like the terminology, I can't help you in that regard. But in this case, what we're seeing is more buying from smart money getting in here. They are saying that they are not concerned with the previous news announcements or the news headlines of the market back in June, back in August, back in November, and all of this period through March, because the price is now higher or meeting those levels. So what does that mean? Well, basically, November was the FTX collapse. August was the period where the SP 500 had its peak and then dropped into a low into October. The June-July drop here, this June low, was after the UST lunar collapse. These are all part of the news cycles. And if you get the price meeting those levels, it essentially means that investors are not worried about this event anymore, and it's priced into the market. So that's a good sign if you are bullish on the market. This is all part of reading the market, tape reading, watching what the smart money and the dumb money are doing on the charts. It's basically Wyckoff analysis. If you are interested, we do have a full Wyckoff analysis course here on our website. So go and check that out. If you want that, sign up to this one here, the premium membership, and there is a ton of content there, educational content that goes from beginner to advanced with trading and long-term investing. So if you are interested, check that link out in the top of the video description. So back to the markets overall and the three macro signals that we are still waiting for. Well, here they are right here. We've got our overbalance in price and time, our log downtrend, so the breaking of that, basically breaking of the bear market downtrend, and then reaching the macro 50% level. So far we've broken the log downtrend. We've covered that many, many times before. Basically, it was from the top to the next significant levels here, which was the top in March, and we broke out in January, held the line in February, held it again during the banking crisis. That was a collapse there in March, and we are now a significant away from that point. So we can say the log trend, that signal has been met. Now we have the overbalance in time and price. Where is that? Well, it's back here. So what we're looking for is the biggest range in the downtrend in time and price. And what we want to see in terms of the market is that it exceeds the time and price. This is a pretty advanced signal to learn about, which is why it's not taught for beginners in trading. Once you get the idea, it's pretty straightforward, but to identify it can take a fair bit of practice. And the important point here is to understand which time frame you are trading on. So once we get to this point, that is now the second macro signal checked off to say that we are flipping from bears to bulls. It doesn't mean that we go to all-time highs. It doesn't mean that we never revisit prices within these ranges where we currently are. It essentially just means that the low is far more likely in. It means that this low here in November is all but solidified once we get these macro signals. Of course, I'm thinking that this is very likely the case at the moment, but we have to get those macro signals checked off. Like I said, this is something that you will not see anywhere else on the internet because it is part of advanced trading strategies. In particular, it's a Gann signal. So if you want to learn more about it, again, like I mentioned, it's through our courses here in Premium. So back to the signals here. What price does it have to get to? We want to see $15,200 to the upside because that is the biggest range that we had. And in terms of time during that range, that was about 9 weeks. So we had from the low to the top. We are well over 9 weeks now from the low in November. We're coming up to about 5 months now. So we've got the time, but we need the price. And the price level to reach is about 30,700. Ideally, we want to see it go just above that so that we at least get a nice push past the price. So a bigger move to the upside in price than the bear market move to the upside. This is in log. If you want to have a look at that, there you can see that it's a little more equal in this case in linear, but in log, it looks like it's already overbalanced. That's not the case, okay? But essentially, we want to get it. We want to see the price get to about $31,000 for Bitcoin. That would give us that second macro signal. And then the final signal that we're waiting for is the macro 50% level. So that level comes in at $42,300. We talked about this on the previous videos. So if you aren't already, subscribe to the channel, share this with a friend who is still believing that the price could go down to $12,000 or $10,000 or is in that macro bearish camp. Because once these signals are met, it is highly unlikely that we will see lower prices to the cycle low. These signals have stood the test of time, over 100 years of backed up historic data that uses these signals to identify market flips. Of course, there are plenty of other signals out there, but this one has been one of the most reliable ones that I've used across my career as a trader and investor. So 42,300 is that level that we're looking for, the 50% of this entire range here. So far we've met one, we're on our way to the second. Should we get to that mid 42,000s, bam, the game is on. If Bitcoin is going up, that typically means that the SP 500 will also be going up. There is no decoupling going on right now on the macro picture. Sure, on the short term, we could see Bitcoin outpace the S&P or the NASDAQ, but in the macro sense, it's not decoupling yet. It may in future, who knows? It needs maybe another 50, 100 years of data. Let's just wait and see, put that aside. But for now, if you believe Bitcoin is going up, that means the S&P also has to be strong. That means the investing space needs to be strong because investors all flock at the same time. Everyone's still part of the sheep and the herd. So in that case, then we still need to see bullish bias on the S&P. Here is another piece of data here. When it comes to a down year in the S&P, what happens in that first quarter following the down year is really important to what may happen in that same year going on to the end of that year. Basically, 2022 was down. Quarter one of 2023 was up. We can see exactly how far up. It was 7.03%. Call it 7%. So when the first quarter of the year following that down year is up, there is a very, very, very slim possibility of that year or the current year being a down year. That's just based on the data going back 69 years. So it's registered 49 times, 20 losses. That's just in all of the years, not the years following a down year. So following those 20 losing years, we'll analyze the performance of the S&P during that first quarter of the following year to see if it registered a 3-month gain or loss. If the S&P increases during this period, we'll analyze an S&P 500 performance for the remaining 9 months of the year, which is currently what we're in. What happens in this next 9 months if those 20 years were losing years and then we had that up year? So the chart below displays a cumulative gain achieved by holding the S&P only during the last 9 months if quarter one is positive after a down calendar year. And the gains are still gains. They're not huge in comparison to cryptocurrency, but it's still a gain. So it's a signal that the rest of the year will probably be up. So that's only if quarter one is up. But now we get the good part. If quarter one was greater or equal to 5%, now you can see the gains are more than double to what they were before. This was just short of going from $1 to $4.50. So using that $1, it goes to just above $11 if quarter one was greater than or equal to 5% in that first quarter. And like we just saw here, quarter one of 2023 was 7%, so it was greater than 5%. So of course, there's no guarantees in the market, but we just want to swing the probabilities in our favor using the data that the market gives to us. This is given to us. These are the facts, not the headlines going out in the news with the latest thing that, what did I see this morning? China circling Taiwan with more fighter jets, and people are worried about that. It's the same thing over and over again. It's that cycle of news fear that continues to go around in the market, and the majority of people miss what's going on in the market, just the pure data and the facts, because they're worried about the fear that's going on out there. And that you layer that on top of the banking crisis of last month and everything else that's gone on over 2022, and you can see why people really do wait on the sidelines, and time basically passes them by until they get into the market when they feel a lot more comfortable and confident, which is typically at the peaks. And so if we just use this data here, quarter one showing above 5% gains, there is a strong possibility that the rest of the year is going to be pretty healthy. From April through to December, during these years, the S&P enjoyed further gains in 23 out of 26 years. So it's not a 100% hit rate, but it's a pretty damn high probability over the course of 70 plus years. So that leads me to this tweet here. And if you haven't already, subscribe, like, and follow me on Twitter down below, because this is really a huge difference. I say here the only difference, but it's a massive difference between a wealthy investor and a poor investor, someone who doesn't make money. Basically, it's just how good their indicators are to understanding the timing of the market. How much do their indicators lag the market? How close can their signals and indicators get to these lows and tell them to getting into the market, and how close can they get out of the market? Like we've talked about many times before in the channel, we were looking for October 2022 to be the low for the S&P, and that's come in very nicely so far. Remember, there is no guarantees here. I always have to get that into my head because the market can teach even me a lesson. But for now, October is holding up relatively nicely when everyone was talking about this market going into free fall and even breaking the COVID lows back in 2020. So like I said here, eventually everyone will see the same thing. How early you're able to spot the trend is the difference between you making a little bit of money or no money and making a shitload of money. Thanks again, guys. I hope you had a fantastic Easter. I'll see you back here at the next video. Don't forget those links in the top of the video description for that doubling of the BTC, and of course the BitGet link here as well for the Aussies to get in on this share. Thanks again, guys. I'll see you in the next one. Till then, peace out.